Radio.
Hey everyone, welcome to another episode of Aftershock, where we're going to give you the latest and greatest in all things Web3. We have a lot of really interesting articles and a lot of really cool information to share with you today. But before we do, just as a general reminder for all those who are listening to the podcast, thank you for being there. If you have not yet joined us over on YouTube, make sure you go check that out. And if you're over here on YouTube, I hope you are enjoying the content. Make sure you give a like and subscribe and share this out with other people so they can learn about all the great things happening out here in the wild world of Web3. So without further ado, we'll go ahead and jump into this week's Aftershock.
The Aftershock.
So we're starting this week Web3 lightning round with some information on FTX. So a former FTX executive will plead guilty to federal charges with a deal. So Nishid Singh, the bankrupt exchange's former director of engineering, went to a pro-offer session with prosecutors last month and is repeatedly nearing a plea deal. So the deal, which would see the 27-year-old Singh plead guilty to charges related to FTX's collapse, has yet to be finalized. Singh would be following in the footsteps of former FTX chief technology officer Gary Wang and former Alameda CEO Caroline Ellison, who pleaded guilty to federal fraud charges in December after reaching deals with prosecutors. Former FTX CEO Sam SBF Bankman-Fried pleaded innocent to 8 federal charges and is currently living with his parents in California. So we're going to continue to see this. I think a lot of people are going to go ahead and take the plea deal. It's going to be really hard to win this case. SBF is going to take it to court, go all the way and pleading his innocence. These others are trying to find the cleanest way to get out of this. And unfortunately, plea deals are looking like the surest way to do that. So again, I don't think Nishad Singh is going to be the last to do this. I think we're probably going to see more plea deals that come to fruition. Our second story is going to look at yield platform stablecoins sued for promoting UST as a safe investment. So as a reminder, UST was in relation to the Terra Luna. So the decentralized finance platform Stablecoin has been sued in Californian court for allegedly misleading investors and failing to comply with securities laws. On February 18th, plaintiffs Alec Narden Ohanian filed a complaint against U.S. District Court of the Central District of California. In it, they alleged that Stablecoin, a DeFi platform launched in August of 2021, diverted all of its customers' funds to Anchor Protocol without their knowledge or consent. Anchor Protocol offered yields up to 20% on Terraform Labs algorithmic stablecoin Terra USD, which is UST. As an early supporter and investor in TFL Terraform Labs, Stablecoin is intimately familiar with UST and Luna. In fact, Stablecoin Inc. falsely advertised UST as a safe investment. So again, as anything that is going to give high yields, the money's got to be coming from somewhere. And looking at the fallout of this, unfortunately, Stablecoin is not looking good for promoting UST as a safe investment. In a lot of ways, people thought so. I had people on the show last year who were adamantly pro Terra Luna. And unfortunately, when you go all in on it, bad things can happen. So I personally know someone who wasn't on Stablecoin, but also went all in on Terra Luna and UST, and unfortunately lost everything. So good reminder, diversify and don't promote things as safe investments when you're in a highly risky environment such as crypto. All of these crypto assets are risky, point blank period. As much as we want to think stable coins are, more stable as far as price movement goes, sure. But ultimately the entire industry is risky. So just again, a gentle reminder, diversify, own your keys. And just because something is quote unquote stable doesn't mean that it still doesn't have its risks. So next story we're going to look at is Helium. So Helium set Solana migration for March 27th. Helium network to Solana has now been proposed according from its foundation. And in a recent blog post detailing its plans for migration, the foundation stated that it's currently constituting an upgrade readiness working group. The group would consist of volunteers in the community to be responsible for monitoring the migration process. would also choose the final date for the migration. And March 27th, it's the tentative date. Now, the reason why Helium is migrating to Solana is that it claimed its focus is currently split between maintaining the Helium layer 1 blockchain and going over to Solana so it can develop more of the network. So because of Solana's speed, scalability, wallet compatibility, and viable ecosystem is supposed to help with its progress. So full disclosure, I have historically been very bullish on Helium. I personally own Helium. I have Helium miners, not hiding any of that. Helium, I saw the rise and fall of Helium, from when it was worth less than $1 all the way up to $50 at the height of the bull market that we've seen. I think it's back down to around $3. Helium has a lot of opportunity and a lot of potential. However, its blockchain just could not handle the sheer amount of adoption that came very quickly once people saw the opportunity that was there. Because of it, a lot of people have fallen off of it, aren't as bullish on it, and it's a shame. But there's still a lot of premise and promise there that I think could still work itself out. Go into a faster and more scalable blockchain, I think, is a step in the right direction. So we'll continue to see what happens with this story. I personally am going to be watching this one closely myself. So next, we're going to look at San Francisco. As San Francisco Federal Bank eyes CBDC system development. And the way that this was revealed was through none other than a job posting, just like other news that breaks. Typically, when you find out these companies that are trying to break into a new system is because of job posting. So the Federal Reserve Bank of San Francisco is on the lookout for a software engineer who can help develop and implement example systems related to CBDCs, which are central bank digital currencies. So on February 18th, posted a job opening for a senior application developer digital currency. And the applicant is expected to aid in Federal Reserve in designing and implementing systems critical to CBDC research. Now, I think this is really cool that people are paying attention to the types of job opportunities that are going out there, but then also that we're starting to see more and more CBDCs hit the market. I don't think CBDCs are the ultimate solution for crypto. I think they do help with speeding up the banking process and have a lot of other applications that are very beneficial. So I like the progress towards trying to use the new opportunities that blockchain presents. However, I don't see CBDCs as truly being the solution that decentralized blockchain ultimately sought out to accomplish. But again, these are two different things. CBDCs centralized, Bitcoin decentralized. So it's I call it 2.5. It's really taking, I think, what's the best of 3.0, still bringing it to the 2.5 by having some centralization, and speeds things up. So I think we're going to see more cities try to adapt this. Interesting to see San Francisco take this on. Our next story looks at Sony. So Sony teams up with Astar Network for Web3 incubation program. Sony Network Communications hopes the program will explore how blockchain technologies can solve various problems in their industry. So the Sony Group has teamed up with multi-chain smart chain contract network Astar Network to launch a Web3 incubation program for projects that focused on the utility of non-fungible tokens in decentralized autonomous organizations. According to a press release, the Web3 incubation program will be organized by Singapore-based StartTel Labs, a company founded by Astar Network CEO Soda Wannabe, and will run from mid-March to mid-June of this year. I think this is really cool, and if you've been watching Astar Network, its price has been pumping, and it's probably because of this news. This is a really huge announcement, and I am now watching Astar Network more closely because this is, we're talking about a huge sample of approval. Sony's massive, and the things that they build are highly impressive. And I also think that Sony's trying to figure out a path to virtual reality and some headsets applications. So finding a way to blend in Web3 with that could also be very, very cool. And so I think this is really, really something to be having on your radar. And I know I'm going to be watching this a lot more. So next we're going to look at MakerDAO. So MakerDAO is voting on a $100 million loan to participate with Florida Commercial Bank. So Florida's Cognate Bank is proposing $100 million participation in loans to MakerDAO's RWA Master Participation Trust. And the goal is to bring another commercial bank into its ecosystem, strengthening the connection between decentralized finance and traditional finance. What I think is really cool to see is it's very clear that Florida is being very progressive as it relates to Web3 and crypto and embracing the opportunities that are within it. So being able to find more ways to bridge traditional finance with Web3 and where things are headed in that direction, I think this is a really cool opportunity. And I think if MakerDAO's model can work, you're going to start seeing other larger crypto organizations start to head in this direction, because the more validity that they can get from working strategically with traditional finance, the more it's going to help bridge that gap and bring on more mass adoption for people to use this. So really cool to see that in MakerDAO. Our next story looks at Kwon, and this one is a sad one and unfortunate. Kwon removed 10,000, that's right, 10,000 Bitcoin from Terra after the collapse. So the SEC complaint against Kwon include allegations around Terra's USD peg, Terra's relationship to Chai, the co-founder of Kwon, cashing out for millions. The complaint filed by the SEC said Terra co-founder Kwon and Terra Labs laundered more than $100 million worth of Bitcoin from platform following its collapse in May 2022. According to the complaint filed in U.S. District Court of Southern District of New York on February 16th, Kwon and Terraform transferred more than 10,000 Bitcoin from the platform in the Luna Foundation guard to a cold wallet, then to a Swiss bank account to convert to fiat. The financial regulator said that the co-founder and the company might have access to more than 100 million in cash since withdrawal started in June 2022. So this is dirty in a lot of ways, because even with all of these people losing all their money, Kwon still found a way to keep the money that they had, and going through a system, aka going through converting the Bitcoin into a Swiss bank, then going into a fiat, basically going from crypto to a fiat on ramp, off ramp. They were able to keep a significant amount of their wealth. And again, people lost everything. So the SEC is going after them and putting this all in plain view for everyone to see so that justice can be served. And I don't think Kwon's going to get away with this. I know a lot of people think that Kwon will, but if there's one thing I've learned around the resilience of the SEC, when they have someone in their crosshairs, they will do anything to find a way to bring a person to justice, especially if they have wronged a lot of people, which is on a sidebar why I think SBF is in a lot of trouble. So looking at our final story in this week's Web3 Lightning Round also has to do with the SEC. So the SEC chair issues warning to celebrities promoting crypto amid latest enforcement action. So Gary Gensler said investors in crypto projects should know why celebrities are making those endorsements, such as Kim Kardashian and Paul Pierce did for Emacs through social media. So recently, the SEC announced a $1.4 million settlement with former NBA player Paul Pierce for allegedly promoting a token project on social media. So Paul Pierce touted Ethereum Max tokens through social media channels without disclosing he had received payment for the promotion, and made false and misleading statements regarding the project. According to the SEC, promoters paid the former NBA player $244,000 worth of Emacs in addition to him posting messages allegedly showing misleading information about profits on Twitter. So celebrities, unfortunately, don't do their own research, hear about a money opportunity, go after it. And then when other people get hurt, aka the fans and unsuspecting people, they then go and try to get justice. And when they do, if it's a high enough profile person to make an example to say, hey, other people, you shouldn't be doing this, they try to make examples of these high profile people. So basically after this happened, the SEC is just putting a blanket out there and saying like, hey, if you're a celebrity and you're getting involved in crypto and you're not doing your research and you're advertising this to people, we will come after you. And I think the message has been heard loud and clear. And I think more celebrities are going to continue to be more and more careful on how they go and promote different crypto opportunities. So that's going to wrap up this week's Aftershock. Again, a lot of really good and really cool articles. Hope you liked the information. If you did, feel free to drop us a comment. Tell us what you think. If you're out there on our podcast listening to this, if you don't mind, go leave us a 5-star review. Tell us what you think. And if it's not 5-star, tell us why and what we can be doing to improve. We really appreciate you joining us as always. I hope you're enjoying the content. If you don't, let us know, and we're happy to give you more of the content that you want to be hearing. And really appreciate all of you rocking with me, and hope you enjoyed this week's news. And as always, stay cryptocurrent.
Thank you for joining us for another episode of Cryptocurrent. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. This show and any other Cryptocurrent production is exclusively for informational purposes.